Hi everyone, welcome to today's video where I want us to calculate how you can use different capital amounts in Royalq. We shall begin if you have $50 or below. How do you calculate your capital amount? If you have $15 or below, you'll only have what we call the initial first buying amount. You will not have the second buy-in amount. So you'll only have one first buying amount and you will have 10 or 5 margin calls. How? Your first buying amount will be 5 or 10. 10 if we use Huobi, and 5 if you use other exchanges. Other exchanges like Binance, Bybit, among others. So if you use other exchanges, your first buying amount will be 5, but if you use Huobi, it will be 10. And to get margin calls, to get the margin calls you're going to use, why do we use margin calls in Royalq? Margin calls act as a safety net in case the market drops instead of going up as determined. They help us to buy more as the coin is dropping. So how would we get margin calls? We are going to get the first buying amount divided by the capital you have. So in this case, we have 50 by 5. 50, remember, is the capital you're using, all below. So here you're going to get 10 margin calls. But there is what we call the initial first buying time. That is the first time the robot buys. So that means you may have 9 margin calls, because there is what we call the initial buying time. The initial buying time. Yes, the robot buys the first time before it comes to pick the margin calls. Then if you use Huobi, your margin calls will be 50 by 10, which will be 5 margin calls. But we shall put 4 margin calls because of the first time the robot buys before it comes to pick the first buying amount. I hope you get it, guys. So in case we have 60 to 100 as capital, we are using the same strategy. I know some of you, when you have $100 as capital, you feel like you have a lot of money. But to be safe in the market, you use the same strategy. Alternatively, for people with $100, you can increase your first buying amount to $15, regardless of the exchange you're using. And that means for you to get margin calls with $15, it is going to be 100 by 15. Remember, the higher the first buying amount, the higher the amount of profit you're going to collect from the market. So here you have 6 margin calls, but remember, there is the initial first buying amount, the first time the robot buys before it comes to pick the margin calls. So that means you'll have 5 margin calls. Okay, so your capital increases 200, 500. Here you have a chance to have 2 first buying amounts. You have the initial first buying amount, and you also have what we call the second first buying amount, second FBA. So what's the initial first buying amount? Remember, we said that the amount of money you instruct the robot to invest in the market determines a lot the amount of profit you're going to make. So in case you have 200 to 500, you may say your initial first buying amount here, you may say 30% times, let's say 250, the middle point of this range. So why am I saying 30%? We are going to first invest 30% of our capital as the first buying amount. We are going to first invest 30% of our capital as the first buying amount. That gives us 75. So this is our initial first buying amount. You get it? So after getting the initial first buying amount, you're going to go ahead to get the second buying amount. Remember, your capital is 250. So to get the first buying amount here, you're going to get the 250 minus the 75 you've invested. And what do we get here? Minus 250, You get 175, 175. Okay, 175. So like we did here, like here on the first point, here. It's what we are going to do here. Our second first buying amount will be 5. But to get margin calls, it's going to be 175 by 5, which is our first buying amount, by 5, which is our first buying amount. 175 by 5, and we are going to get 30 margin calls, 35 margin calls. And here we don't have a case like here, because remember the robot already invested 30% of our money, and here it means that these 35 margin calls, they are whole because the initial first buying amount was 75. So that means when it starts buying the margin calls, there will be 35 because the initial time was already bought. I hope you get that. But here, the fact that we only have one first buying amount, that is why the margin calls are reduced to 9, because there is a time it buys before it comes to pick the first margin call. I hope you get that. So in case I'm using a first buying amount of 10, which is 175 by 10, here we have 17 margin calls. I know you're saying, why is she rejecting the points? We don't have a half margin call. There is no way you're going to buy a half margin calls. So these 17 margin calls, they'll also be whole in case you're using a first buying amount of 10, because it already bought using your $75 before it came to pick on the 17 margin calls put. So what if you have 500 to 2000? Here you can use initial first buying amount of 40% times 1000. We are using any amount between 500 to 1000. So in case your capital is in between here, you can sit down and calculate. So 40%, what is 40% of 1000? So it is 40% times 1000, and we are getting 400. And remember, this is the initial first buying amount, 400 USDT. This is the initial first buying amount. This is the amount the robot is going to invest the first time. So the second time, we want it to invest less, because remember we say that margin calls act as a safety net in the marketplace, because sometimes the coin do not go as we expect. So our second first buying amount will be 1000 minus 400, and we get 600 to get margin calls. So remember, our first buying amount is 5 or 10, but here we are getting the amount of money that is going to help us see the margin calls we need to use. So it is 600 by 5, all 600 by 10, all 600 by 15. Yeah, remember we said that our first buying amounts are 3 in case your capital is $100 and above. Yeah, your first buying amount can go up to 15. If your first buying amount is 15, is 100 and above. But if your capital is below $100, my sister, stick to $5 as your first buying amount, all $10 if you use Huobi Exchange. Remember, margin calls are acting as a safety net for us in the marketplace. So that is why for this person with $1,000, we can get several margin calls. So 600 by 5, what are we getting? 600 by 5. Okay, we are getting 120 margin calls. Here we are getting 60 margins. And here we are getting 40 margin calls. So in case you have some good capital, you can use 15 as your first buying amount and put 40 margin calls, or 10 as your first buying amount, use 60 margin calls, or 5 as your first buying amount and use 120 margin calls. The more margin calls, the better, because we do not determine the market. It is determined by the buyers and sellers in the market. So some of you, I know you're saying that if I have $2,000, why is it that I'm selling one coin? $2,000 is a lot of money, especially in Ugandan shillings, all African money. But in the market, especially in a ranging all downward market, it may not be a lot of money. It may not be a lot of money. So, for people with 2,000 and above dollars, they can trade two coins. Okay, for people with 2,000, you can put 1,000 in each coin, but you can still trade one coin, which is safer. If the market is good, you can put 1,000 per coin. So people with 2,000 and above can trade two coins at the same time, and we are going to use the same strategy. So for example, in case you have 5,000 as your capital, by 2, you're going to get 2,500. We are speaking in US dollars. We are going to get 2,500, and we are going to use this same strategy here. Yes, so it's going to be 2,500 times 40% to get the initial first buying amount, that you're going to put the market, which is let me see, which is 1,000. So your first buying amount is going to be 1,000, your initial first buying amount. And since you have good capital, you may use a first buying amount of 20. So it may be, since you may use, a second, this second first buying amount. Let me write it in letters so that it doesn't confuse you. Second first buying amount, you can put at 20 for people with 2,000 and above capital. So it is going to be 2,500 by 20. How many margin calls do we get? So 2,500 by 20, we get 125 margin calls. 125 margin calls. Remember, these are whole because the robot already bought using our $1,000. So, oh, sorry, we made a mistake. It is 1,000 minus 2,500, we get 1,500. So 1,500 by 20, we are getting 75 margin calls. Yeah, if your capital is 5,000, you divide it by 2, you get 2,500. This is the amount you're going to put in each coin. So your initial first buying amount will be $1,000, and your second first buying amount will be 20. And then the margin calls is 1,500 divided by 20, which is your first buying amount, and you get 75 margin calls. 75 margin calls. So guys, that's how we calculate the different capitals. As you see, you can always visit back to get something. Remember, I said margin calls act as a safety net in the market. And also manage to watch our second video where we are going to see how you can set the margin calls of each of these capitals. Actually, not of each of these capitals, of one of these capitals, actually like 2. Okay, don't forget to comment, like, subscribe, and share. Bye-bye.